Mike Segar according to PGIM's manager and global investment strategist Guillermo Felices. Second Donald Trump Presidency, which can trigger a anger watch in long-term bond markets. The average also had remarkable rally that resulted in the S&P 500, which reached record levels on Monday. Most focus piyasa maintains what short-term economic data and Federal Reserve means for cutting way to cut potential interest rates this year. The Fed is directed with consensus that U.S. economy will manage a soft landing. U.S. economy at beginning year a stagnation Fed's 2 target without triggering inflation. Some analysts also look at the U.S. presidential elections and beyond a financial and geopolitical lens. In November, Trump's tax reform invoice in 2017 reduced best corporate tax rate from 35 to 21 and selected a second magic in White House. 15 of campaign trail promised to track campaign.He complains about relevant risks. The state a Trump presidency, which we think will be positive for economy in terms of tax cuts. State will probably be more financial incentives through tax cuts. Question: what this stimulus does to bond market and what is ground for economy. If the economy is still very strong, more financial incentives are not really required. The bond market may be tense about debt sustainability and higher interest rates. Therefore we can see a little higher return. The U.S. economy has proven be surprisingly resistant to a steep increase in interest rates. Combat high inflation in the last 2 years, and growth and employment remained intact. If ground is much weaker and deserves to push extra financial, I think market be good and it will handle it in a good way. Be supported. Risk in a high open period. Important point that Felices accepted. America's financial position in last decades is worsening. The U.S. government deficit expected to work between 6.8 by end of decade and Fitch Monday. This deficit from 2023-10 He predicted that GDP exceed 8 by 2025. Since January 2025. White House have very little place for White House large government expenditures commitments or Trump's promising tax reductions. The market is currently pricing Felices, a former senior economist in ENGILDEKEK Bank. Save rates again. Reduce rates of day. If there's some weakness in economy, he have to agree again.